G'day everyone, welcome back to Pete's Investing. Today is February 10, 2023. This is the Disney share price update. There's been a bit of news about Disney lately. I just want to give you a quick update in terms of how the share price is behaving. So up here we've got the moving average 200 and the moving average 30 on the share price. And down here we've got the CCI 1500, which we use frequently in our trading strategies. Down here you'll see it's just touching the CCI itself is touching the its moving average, the moving average 400. So we're going to wait to see if that's going to break to the upside, and that moving average needs to turn into a green or a more positive move, such as back here, to be more confident about going long in Disney. So just be mindful, even though it's broken the moving average 200, which is often used with traders. It's broken moving average 200 on a share price, but the CCI is still showing a potential bounce down if it doesn't appreciate much more than that. Just to show how it works, basically the CCI has worked very similar to the moving average 200 during these periods. Entries and exits, if you want to trade that. There's a bit of a false break above there, likewise with the moving average 200 on the share price. Then it again showed a buy signal there. Now notice here it did say to get out of it, so it gave you a bit of a warning to get out of the share price before the moving average 200 did so. So even though you might have been trapped in there and entered it once or twice, it gave you a couple of opportunities to get out there as well with small profits. And ultimately you wouldn't have traded long again during that period. Again, to understand how to properly trade using the average down approach, reference the playlist at the end of the video and also some links in the description below. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. The reason for that is blue chip stocks have generally got a good history and a good track record, and you want to avoid going speculative because you're not sure where that stock, especially if it hasn't got any history, you want to avoid making just guesses or gambling on potential trades. Buy stocks which pay dividends. The reason for that is if the price goes against you and you're not closing out according to gaining a profit in the short term, at least you're getting some level of income via dividends. If the stock price goes against you, don't short positions, go long only. So again, similar to the blue chip environment, if you're going to go short, you're basically speculating, and if you are going short and you have to pay dividends, the dividends will be paid to those traders that are going long. So that'll be just an extra cost in your trade. And don't trade on news. Price is already factored in the share price. If all the insiders have generally benefited from any inside knowledge of the news, and so by the time it hits the websites or the papers, you're getting late on the bus, so you're going to be missing out on any potential gains. Thanks for watching. Don't forget to click the subscribe and the like button and click the notification bell to get all the updates to the channel. If you want to support the channel, subscribe to the Patreon page. The link is in the description below. Happy investing and speak to you in the next video.